Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1731st edition of Short-Term Trading Live with Oscar. Good evening, traders. If you'd like to hang out with me day, night, whenever these markets are open, you want to come to my hangout, I've got a free live trading room at livewithoscar.com. Just know that you'll need Internet Explorer or Microsoft Edge in order to enter the chat room. So forget about the reasons why for now while we're rebuilding the chat room. Use Internet Explorer or Edge and join me in my live trading room at livewithoscar.com. Enough of that. Let's move forward. What do I want to show you? This is gold's daily bar. Before I tell you what's on that, you must remember something, and I always try to stress this. And that is this: futures trading is extremely, extremely risky. Oh my goodness, can't type today. Please remember that. I typed it before your eyes on purpose. Futures trading is extremely risky. These markets lately have been whipping around like crazy. You can lose more than you had anticipated. Please be careful. Know the risks behind trading. Put your stops in first. Realize that trading in this environment will require risk capital that you can absolutely possibly lose if you're going to play the game. Now that I've told you that, if you use your brains and put your stops in first, it will help reduce the chances of you going broke. And let's look at gold. Gold's daily bar. This, I know in my last video on Thursday night for Friday trading, I told you that we were going to look to buy gold. It never materialized. The possible flight to quality never really materialized in gold. But the more you look at this little formation up here, the more you think that this could very quite possibly be a head, a left shoulder, a right shoulder, with a bear flag building in that right shoulder. A head and shoulders generally will tell you that a market might want to take a little pullback. Gold's omni is red, so if it's got a head and shoulders and a bear flag and a red omni, we are going to look to sell the rallies in gold. So for trading on Sunday through Monday, that is February 12th, 2018, we will start off with selling the rallies in gold. Remember, this is a tricky game, so put your stops in first, okay? And let's move along, because what I really wanted to show you in tonight's video isn't quite the gold market. It's this next chart that I've come up with. I think, for me, I find it to be fantastic. This is the S&P daily chart. Just this chart tells me to tell you, do not fall in love with the downside just yet. Just yet. Do not fall in love with the downside just yet. Why would I say that? Well, look at this amazing hold between these two averages right here. This is a very long-term chart now. This is the S&P cash chart. It goes back for many years. Look at the crazy hold here when you hit these two averages right here. Look at that big turnaround run up. See the green bar that ran up after hitting those averages? You've literally got to go back to the middle of 2015 to breach this average. Look, hits it here, doesn't break it. Hits it again, doesn't break it. Let me back it up for you a little at a time. Hits it here, again, does not break the average combo. Here, stays above the average combo, or gets above the average combo, and let me show you why. We've got to go all the way back to 2015 to see these averages get breached. And when they got breached, they got breached. It went down, stayed under for quite some time, and finally, within 6 months or 8 months, started to move their way back up above the averages. However, the breaching of these averages is rare. So I am saying until, I'm not saying it can't happen, right? Of course it can. Until we breach these averages, it's time now to get very nimble with short trades and possibly consider a long trade. In fact, for the S&P, we've literally got a two-sided omni. We're going to either sell the rally or buy the dip. If the rally comes first, we're going to short the rally. If the dip comes first, deep enough, we are going to buy the dip. There is a two-sided omni. come to my trading room at livewithoscar.com and I'll explain what that is. But we could either be short or long today, depending upon what sets up first. This message to you is to tell you, do not fall in love with the downside just yet. Maybe it's coming, but until we breach these averages and it stays that way, we have to go with what is the recognized pattern since 2015. The recognized pattern is you stay above these averages. Okay, so it can happen. I'm not saying it can't. You know me, I'm very open-minded, just showing you what's going on with the analysis. So two-sided, we'll sell the rallies, we'll buy the dips, depends on what happens first. Again, you want to see what we're doing with that, join me in my live trading room. But remember, you need to use Internet Explorer or Edge. If you show up with Google Chrome, it will not allow you access into the chat room. None of my doing. It's just the way the internet works for the moment being. So join me at that trading room using Internet Explorer or Edge. Traders, keep your emotions out of trading. One of the best things I can do to help you with keeping those emotions at bay is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Now, traders, remember, we can absolutely positively go down, but let's see it break these averages if it's not going to hold them before we call this tremendous bull market out. Once again, when you look at something that runs from the bottom of your screen all the way to the top, even with this pullback, it's not the worst look you'll ever see. Join me in my live trading room. I will see you there.